Good morning, and thank you for spending your Sunday morning with us. My name is Ernest, and I'll be your moderator today. The topic of this session is retirement challenges, where the panel will talk about the trends and issues to take note of as you save and plan for the retirement you want. I'd like to introduce our esteemed panel of speakers. First up, I have with me Mr. Husaini Husin, CEO of Private Pension Administrator Malaysia, or PPA. PPA is the central administrator for PRS, the private retirement schemes. Hello, Husaini. Good morning to you.
Good morning.
I also want to introduce Ms. Lynette Lee, CEO of the Financial Planning Association of Malaysia, or FPAM. FPAM is a certifying body for the Global CFP mark and International IFP certifications. Hi, Lynette. Good to see you.
Good morning, and thank you for the opportunity to speak.
Pleasure. I also want to introduce Mr. Mark Odell, CEO of Life Insurance Association of Malaysia, or LIAM. LIAM is a trade association promoting a progressive life insurance industry. Hi, Mark. How are you?
Great. Good morning.
Good morning. So one last piece of housekeeping. This discussion will run for about 45 minutes, followed by a 15-minute section for Q&A. So feel free to drop your question in the Slido software. You'll see the button below the screen where you're watching this session, and you can drop it in throughout the session, and we'll try to get to as many as possible within the allocated time. All right, with that out of the way, let's begin. I'd like to start with Husaini. Can you share a little about how the private retirement schemes came to be and the retirement challenges that it sought to address when it was first introduced?
Okay, thanks again for allowing or giving this platform to speak. To begin with, PRS was launched in July 2012 and came into operations about 3 months later in October. And the first units were rolled out by late October or early November of the same year. The schemes are designed to offer a structured and regulated way or regulated plan for Malaysians to save more for their retirements. All Malaysians of 18 years and above can save into PRS, whether they are from private sectors or public sectors, and especially it's designed for self-employed, since this group up to that point lacks a formal retirement saving option. And allow me to share some statistics. Until end of September 2020, we have had a total of 470,000 members who have saved in PRS since the beginning. And even though with the COVID and things like that, our AUM has been growing now we are seeing about 4.12 billion savings in PRS. And talking about COVID, one of the relief measures mentioned by the government in late March 2020 is that PRS members below 55 years old, because 55 is the age, retirement age that we take up in PRS. Meaning if you are above 55, if you are 55 and above, we consider you at a retirement age, therefore you can make withdrawal without any tax penalty. So for PRS members below 55, as part of the COVID measures, which is running since late April until end of the year, we are allowed to withdraw up to 1,500 per members. And up to now, we have seen a total of 5,000 members who have taken advantage of that. Okay, I think that's it for me for now. Back to you, Ernest.
Right. Thank you, Husaini. Mark, can I come to you next? Retirement is challenging. Can insurance help meet some of these challenges?
Yeah, certainly. I mean, I think when you look at life insurance, you look at, in terms of retirement, you look at, there's two different phases, right? During the accumulation phase, which is really from when you start work until when you retire, protection in terms of life insurance plays an important role. And particularly for most of us will be married and have families, and a happy retirement, a successful retirement may be dependent on both income earners or the main breadwinner being able to work throughout their career and save enough, right, for a successful retirement. In the event that doesn't happen, right, this is where life insurance can come in. It's really necessary and needed, right? That main breadwinners have enough protection on themselves that they can fulfill the plans that they had if something may unexpectedly happen. The other piece really is medical. I think one of the biggest concerns for retirees or pre-retirees, right, is what am I going to do for medical protection, right, after I retire? I have insurance now. I like to access private healthcare, and I'd like to continue with my insurance. The fact is, though, is that the cost of insurance is going to become, just due to inflation, is going to get higher and higher every year. And so retirees need to plan ahead for that. There's a way you can pre-fund for that using insurance, where you could set up something that I personally did actually, is buy personal insurance before I retire, and then set up funding, extra funding in the early years that can help offset some of the increases that inevitably will come, as you age. The other area that I think is lacking and that needs some attention, right, is on distribution schemes, particularly annuities. Annuities are not very popular in Malaysia and in many Asian markets, and I think the industry needs to rethink, and innovate on how annuities can play a part. It's well reported that the average Malaysian will exhaust their EPF within just a few years of retirement. And so, the idea of a guaranteed lifetime income, is a very important part of anyone's retirement plan. So, there is a lack of post-retirement products in Malaysia, things like long-term care. And again, I think there's some work that we need to do to improve the attractiveness and the use of annuities. But I think, just to sum it up, I think the most important part insurance can play is protecting pre-retirees so that their families will have the retirement dream that they had all hoped for. Back to you, Ernest.
Frozen.
And I'll just pick up from I'll just pick up a little bit from Ernest and also from Hussaini's as well as Mark's session. I think the common challenges for retirement is that a lot of people think that if they're more than 10 years is ahead too long for them to plan. So they fail to plan early enough. When they get too late, they realize that it's a huge challenge for them. The other thing that which is very common we hear from people is, I don't have enough money or have just enough from month to month now. How am I going to save for the future? So a lot of them do not realize that if you actually start saving today, or when you start working, or as early as possible, you actually need to save less, because you have a longer duration for your money to grow. So that's one area. The other area which I would like the audience to be very aware, because very common, they'll tell you that retirement is a number, just name it. And a lot of people think that if I budget for 60% of my last earned salary, that will be enough. Here's a picture of what happens when you age. There are 4 stages that you go through. When a person passes their retirement age, the first stage is their active aging, whereby they still can enjoy their money, go for holidays, maybe still continue to earn a little bit of money, work because they enjoy doing rather than because they're forced to. The other stage they will go into is aided living, whereby either health, be it physical or mental health, may have slowed down. Therefore, they need a little bit of help from people to get them along the way. And then the third stage is dependency, where physically they will be dependent on people to help them, whereby for them to eat, for them to get up and move, mobility, they may be more dependent on a caregiver. And the last stage is the end stage, where palliative care is required. So all this has a cost to it and should be planned early. And this is where financial planners are aware, and they're doing this for their clients. Back to you, Ernest.
Thank you, Lynette. So apologies for the breakage in the internet, but I'm back now. So I did manage to catch Lynette, your input about, we are healthier and we have to take into account all these these four stages. Hussaini, if I can come back to you on this next topic on affordability. Back in the day, people retire at 55 and live to about 60 years old. Now we live on average until 75, but retire at 60. So is it any wonder, that affordability is an issue? Do we need to change the definition of retirement?
Well, what Lynette says, people are, and also other people are saying that age is just a number for those who want to be, more positive about it. And also, perhaps you'll hear this joke that it's also a mind over matter thing, which is if you don't mind, it doesn't matter, right? So the best way is to always keep it positive and to go into your retirement fully ready. Anyway, whether retirement age is revised or not, that is a policy matter for the government, for the policymaker, and for our legislature to look at. Obviously, there is a political issue, sensitive issue with regards to raising the age of the retirement age from 60 to higher, and economic issue as well. I'm sure if you follow the news, there is a survey being done by EPF to gauge whether Malaysians are ready for to revise the retirement age. But what is most important for us is how prepared are we to face our retirement? Whether we work, work if you must or work if you want to, but be prudent. You can't be traveling around the world all the time, right? It's costly. And now with COVID, it's also not very encouraging. Besides, there are more to life than just traveling. So it's more important to also plan ahead while we are gainfully employed now. Start small, start now. That's what we always say at PPA. And then we need to imagine the kind of golden years that we wish that we can afford. So then we work our steps toward that, especially on the financial aspect. I can share with you that one wise man once said to me that the best way to retire is to continue working. So working is important, whether now or in the future. Is what we derive from working that is important. So, like for example, previously when we used to go out on road shows, we were often asked by younger audience about they want to retire early. So I stress to them that don't aim for an age where you want to retire early, but aim to be financially independent. Because that's when you decide whether you retire and travel the world, or you work for pleasure, or if you don't save enough, then you have to work because you need to fund your retirement. But when you are financially independent, what you do after that is entirely up to you. It's nice to have choices when one is financially independent. We hear stories of maybe in other countries or even in Malaysia where people or the elderly are left without any support. It used to be that, even in the Malay culture, I'm sure the same in other culture in Malaysia as well, where we look to our kids to look after us, or we in our elder year. But that doesn't happen much these days, where as parents like myself, I imagine that my kids cannot afford to buy houses when they get into employment. So we parents have to at least help them started, and we also have to take care of our parents, our elderly parents. So we are like in the sandwich generation, where we take care of the elders and we also take care of the youngs. And to be able to do it, one has to be financially independent, and we need to plan ahead, this kind of thing.
Yep, definitely. As mind over matters. Mark, can I come to you next? Will insurance be affordable in light of our longevity?
Yeah, first, let me just add to what Hussaini was saying. I mean, I agree 100% as one who is going through the journey now, right? I mean, I retired 2 years ago, and decided certainly just my idea of retirement was not just to sit home or golf or do leisurely activities every day. And I think we all want to have a vibrant, exciting, interesting retirement, and so really planning ahead for what that potentially means is extremely important. you know, adjusting the budget, looking at what's your housing situation, the healthcare, as I said, all those things really go into you know, into a positive formula for what is retirement. And I do think the word retirement actually is a bit antiquated, right? But in terms of insurance, is it affordable? I mean, it absolutely is affordable. I mean, this is a topic that comes up a lot when you look at penetration of insurance in Malaysia is relatively low. You know, it's reported that about 54% for policies per capita, and when you take out duplication, is in the low 40s, right? Only about 40% of Malaysians own a life insurance policy. But since my involvement in the association, I really think it's an awareness issue. And that's one of our big initiatives, is to increase awareness, because you can buy pure protection for as little as 1 ringgit a day. You know, so I mean, the affordability issue is really not the driver. It really is awareness, and in some sectors like the B40, it's a little bit more complicated. I mean, I think you have to have the right type of distribution model, and make use of non-traditional trusted sources to get messages to that segment, but certainly not an affordability issue.
Right. Thank you, Mark. So we have the savings perspective as well as the protection perspective. Lynette, how affordable it is to seek financial advice, to bring all of it together?
Well, before I address that question, I think I need to create some awareness here first, because you need to budget today for your tomorrow. Because when you retire from work, you don't retire from life. So what we should have as an individual, for all of us, you should have a pre and a post-retirement budget. And I have both. I've already put mine in place already. You need to think about your sources of income, passive income, like your dividends, your interest, your royalty, your pension, or you are looking at more active, as Husani rightly say, work for pleasure. I really love that term, WFP. So you're looking at maybe doing some consultancy, ad hoc work, maybe even become a planner or an advisor in your own right, or become a tied agent. You know, you can even add PRS to your EPF to grow your retirement budget more. I know I do that. I have both EPF as well as retirement and more. So I think the other thing you need to also think about is your expenses, your living, medical, long-term care. This is where it speaks to Mark's what about protection needs, your lifestyle that you want. You may even need a caregiver in your later stages. Have you budgeted for that? And if you are close to retirement and you don't think you have enough, you can either extend your working years, or you can reduce your retirement expenses, or in worst case scenario, you do both, meaning that you extend your working years. After all, actually, it doesn't matter when you retire, as long as you're mentally sound and you are physically able to continue to work, your health permits you, you can still do a lot of things, right? So I think that's very important. So coming back to the question of, should I speak to a licensed financial planner or should I do it myself? For those who are number savvy and you are very good at planning, it's good for you to maybe do it for yourself, but you may want to refer to a licensed financial planner for a second opinion. Because when you plan for yourself, you tend to blindside yourself. But if you don't have time, you may want to then seek a licensed financial planner who can do all this for you and more, because they will also look at relationships with your family members and your relations also, because that factors in when you retire, because who's going to look after you, who's going to look after your money if mentally you're not there. So I think these are the things that one has to look at. And if you ask in terms of cost, I will ask back the audience, is it cheaper to hire a financial planner than to make a financial mistakes? And you need to reflect and ask yourself, do I know someone who has retired and not enough money? Now, did he do any planning? If he had done planning, would have been a better outcome. If your answer is yes, then yeah, a licensed financial planner is someone you will want to talk to, either as a second opinion or even someone to help you. even for me, although I have a certification in financial planning, I still seek a second opinion of a financial planner, because I know that I may tweak my figure a little bit, because I'm so passionate about what I want to do, and I may also be not so disciplined in some areas in terms of expenses. I may justify for myself. So the financial planner will be someone who tell you, no, 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 you'll be your conscious, you need to do that. So I know I need that. I have a financial planner, and I work with a financial planner.
Right. Thanks, Lynette. I'd like to move on to the topic on youth. Young people, they feel invincible and they think they will live forever. But those, attending today's session obviously take their personal finances seriously enough to spend their Sunday morning with us. Husaini, if I can come back to you, for fresh graduates and young working adults, what are some strategies that they should have in mind on how much they should be saving?
This is always not an easy question to plan how much we need, especially if for fresh grads. Now, fresh grads are getting younger and younger. Perhaps they enter workplace at the age of 22 or 23. Then they have more than 35 years old, or 35 years to get to the retirement age. So when we at PPA, we always say, as a simple rule of thumb, these young working adults, you just need to save additionally up to 10% or more of your salary. So as soon as you guys start working, so when you get deducted for the mandatory scheme, rightfully you should also put extra through salary deduction, for example, for your PRS for the extra bit. We have, if you go to our website, www.ppa.my, we do have a retirement calculator which can help you simulate what kind of, according to your current lifestyle, meaning how much you earn now, you can, based on some mathematical assumptions, you can see how much you need towards at the end of your working life, say at 60 years old, and how much saving you can for a simple, just enough to give you an indication. It could be 800,000, it could be 1 million, it could be 2 million, and so on. Yeah, that will depend on the kind of lifestyle that is projected based on your current salary. So coming back to save more through salary reduction. So as they grow, or as you grow your career, your lifestyles are going to improve. You may want to change your car, have a family, move to a different neighborhood, for example. So you need to revise and save a bit more. You cannot be living the plan like that and then don't revise. So that's where a financial planner can advise you on what to do with your aim for the kind of lifestyles that you aim or you imagine for your golden years. Of course, commitments will always be there as we live our day-to-day life, as our family grows, as we have a different kind of lifestyle. But if we go with the principle that if we live according to our means, and our means should include save extra and have protection by way of insurance, for example, then we should be fine. I mean, the rest, as we say, we plan, and then we revise and go back and review and adjust where necessary, and always go with ukur baju di badan sendiri, or spend according to our means, then we should be fine. Yeah?
Thanks, Husaini. Mark, for insurance, do the young and healthy need insurance? I mean, they'll get to save some money from not paying the premiums otherwise.
Yeah, let me first just add to what Husaini was saying. I mean, I think simply put, when I was young, I was given advice to really set aside a specific amount of your income first before you spend the balance, right? And it really comes down to discipline.
Correct.
And being able to do that from an early age, right? Whether it's 10%, 15%, whatever the number might be. It's really important to do that, because I think one of the pitfalls that the youth can fall into is accumulating too much debt, buying things too early that they can't afford. And before you know it, they don't have anything to save, right? So, I mean, saving early and saving, in a disciplined way is extremely important. Yes, insurance for the youth. I think one of the things, the asset, the very thing you're talking about, that youth maybe they're healthy, they may feel invincible, they're not going die tomorrow. They're not going to get sick tomorrow. That is an asset, right? I mean, so you have to think about, you purchase insurance not just with your premiums, but with your health, with your good health, right? And good health, it cannot be taken for granted at any age, right? I mean, we never know when we may turn from good health to, to less than that, and so on. So, two things to come to mind for me for youth is make sure they have adequate medical insurance. Sometimes even employer plans are not that comprehensive. You can plan ahead. I mean, almost everyone, in their 20s believes that one day they'll be married, have a family, and have children, right? And, if you're smart about it, you can allocate a bit of your savings toward insurance at a very early age that can give you some advantages when you get to those family years. So being healthy is the very reason why you should look at insurance while you're young.
Thanks. Thank you, Mark. Lynette, I'd like to get your thoughts on that too, as well as what do financial planners look out for, when consulting someone in their 20s or 30s, like what Hussaini said, when you just started.
Yep, when you just started working. Yeah, and a valid point. We have a rule of thumb. We love rules of thumbs anyway. It gives you a reference point. If you have 25 years in retirement, if you think that from the whatever age that you want to retire, you expect to live X amount of years more. So let's give an example. You expect to live 25 years after your retirement age. Then when should you start? The best is to start 25 years before you hit your retirement age. Why? Because you can save more. I mean, you don't have to, you can save a smaller amount, but it's easier. To save up to 1 million, let's say 1 million ringgit for someone who's going to retire, if they start early, they just need to put in between 200 to 300, I think 300 by today standard, 300 per month in an investment portfolio that gives you an average of maybe 8% per annum, and you would have 1 million by the time you retire. So this is just a quick example only. You need to talk to a financial planner to work one for yourself. But yeah, so if you're young and healthy, take good advantage. And if you are working, you will have your EPF. And if you look at it, you will have saved 11 and 12. So you're looking at 23%. When I started working, a sales manager told me you need 30%, you need to save 30% of your salary so that when you retire, you have a comfortable retirement. And I subscribed to that because when I spoke to him, he was very close to retirement. And the next year when he retired, I could see that he was enjoying his life. So I subscribed to that. So if you go back to this number, and if you look at your EPF, you would have saved already, what, 23% for those, if you get higher, better still. But assuming, let's take a standard of 23%, then you need to still make up another 6%. So where do you put the other 6%? Hey, PRS is available, and it helps you because you are disciplined in your saving. You cannot touch it until you retire. Then I come back to the young ones who are self-employed, and there's a lot of you out there. So what do? Well, if you have a company, then you must also, or a business, you must also put aside for yourself, because you are going to also retire one day. So you use by the same formula, you cannot go wrong. You just need to be very disciplined. I think that's the most important, discipline. After you have put aside this savings for your retirement, you have put aside your protection plan, be it takaful or even insurance for that matter, you can spend the rest. Actually, planning is very simple, but the thing is, are you disciplined, and do you know how to work out the numbers? If you don't, seek help.
Right. Thank you, Len. I'm also wondering whether technology can help some of this, discipline. Today, we can top up our retirement fund. We can purchase insurance or meet a financial planner and attend a session like this all online. Hussaini, maybe I can start with you. Do you see technology addressing, some of these discipline issues in our retirement challenges in terms of savings?
Essentially, our aim at PPA is for technology to make it easier for Malaysians to save. Yeah, it's not about to address the retirement challenges because I mean there are other considerations that, as what my panelists have mentioned, my fellow panelists have mentioned earlier on. So our aim at PPA is just to roll out some value-added services via online for Malaysians to make it easy to save more through PRS, and also to do relevant transactions as we manage our transactions and investment in PRS. Yeah. As mentioned, while we cannot expect technology to address all of the challenges, but certainly with the availability of technology, Malaysian will find that it is less daunting or less challenging to plan for our retirement. Yeah, for example, in conjunction with FPAM, perhaps I can mention it here, that we are going to roll out a pilot service, online service to PRS members first. I say it is a pilot, where we offer, or we are going to offer retirement advice, so that you can talk to a certified financial planner that have volunteered their services to be on the online platform, as to get it started, to at least ask or be guided in the right way. So that is one way of using technology and taking advantage of the COVID situation that is being done online. Yeah? So that is something that you can look out for once we launch shortly or in the next few weeks. Yeah.
Mark, if I can come to you next, fintech is almost becoming mainstream now, and I see a lot of this phrase insurtech in the media a lot. Will insurtech be mainstream soon, in that more people would onboard online?
Well, I mean, we see the numbers of individuals researching insurance online has grown tremendously, right? Pre-buy, right? And then only in recent years have we seen the actual transactions, people actually buying online, increasing. But it's still a very, very small portion of the amount of products that are actually, or amount of purchases that are actually done, right? I mean, it's still less than 1%. So there's still a long way to go. And again, I think it's a matter of awareness. It's a matter of motivation. I mean, the fact is still that people don't wake up in the morning thinking about maybe they'll buy some insurance today. There really has to be, an increase in awareness of the importance of planning. Also, planning is the same way. People don't like to plan because it often almost always means sacrificing something today for tomorrow. And so there's a lot of education and awareness that needs to happen. And I'm a big proponent of we need to do more in the school system. We need to do more in the secondary schools, to really help prepare the youth, right, for what they need to do when they become adults. So digital is important. It's where everybody goes for information, and it is growing channel for purchases and transactions. But we're still a very long way away from saying that the insurance tech or digital purchases for insurance is mainstream. It's still very fledgling.
And Lynette, where do you see your industry going with technology?
Fantastic. And just to back up what Mark and Huzaini has said, if you go to their website, there's a lot of information for consumers and audience to see. On top of that, by the way, this month is celebrating World Financial Planning Day anyway, which happens on the 7th of October. But thanks to the Capital Market Development Fund, FPAM has spearheaded smartfinance.my is also using technology where the audience can go in and actually video on demand learning. There are 50 over videos, 2 to 3 minutes, where you can learn about your personal finances, ranging from basic savings, budgeting, right up to protection, even estate planning for that matter, which is also important. As Mark says, you cannot tell when your health is going to be good, or for how long. You cannot tell when you're going to be around, or for how long. So these are things that you need to look at. So yes, I believe technology is there. There are also a lot of websites which you can actually key in your figures to know where you stand in terms of the personal finances. But those are just snapshots, because detailed calculation would be more accurate when you work with someone who is like a financial planner, because they can talk about your future value. Then they will also work in that, okay, if this is how much you need to save, this is how much money this is how much insurance or protection takaful you need to buy to ensure that you're able to achieve your retirement goal. So these things come into the picture and completes the puzzle. And as Husaini says, we are also exploring. Thanks for the opportunity. We have licensed financial planners. They are licensed from Securities Commission, who would be actually working with PRS members to help to advise them as well. So in terms of financial planning, at this point in time, until AR and VR, which is AI, artificial intelligence and virtual reality get more sophisticated, we still need the human touch for financial planners. But you can get information to make informed decision. And we did a survey in 2019. We found over 60% of people actually go online for information. They just need to know where to go and not fall into the wrong website. That's all.
Right.
Back to you, Ernest.
Thanks.
Ernest, could I just add a little bit to this topic before we move on?
Of course, Mark.
I think that, when you talk about insurtech, one of the areas that is actually been quite significant is technology that aids the advisor and the consumer. I mean, COVID was a perfect example, right? I mean, for the MCO, if obviously you recall, we were all locked down, to speak. And so face-to-face interaction was, came to a halt. But if it weren't for technology, right? Technology enabled advisors and customers to communicate with each other, right? To continue to do business. Agents and financial planners were still interacting with their customers, right? And so I think the big thing is that what we see is that technology is becoming a core enabler, right, for advisors and customers to interact with each other. There really is still a small segment of the market, maybe less than 10%, that are really DIY folks, and that really is true in almost any segment you look at. But technology is really becoming something you can't do without, right?
Yes.
Right. And maybe I can circle back to Husaini a little bit about, I think, on the technology front. You mentioned the retirement calculator before. PRS is voluntary. As we progress along our life stage, how do we know whether we are contributing enough? Are there tools that we can use to tell us that, or is it different for everyone?
Well, most important is, as in terms of concept, financial literacy is what everybody in Malaysia at least should have. At the moment, I think the level is below what has been suggested. Yeah? So in that sense, we always need to ensure we are spending according to our means. I cannot say enough about this. Yeah, like for example, if we have mortgages and other debts, then we should do debt management to keep us on top. There's a Bank Negara agency for that, a KPK, if we are in need of that service, especially during the period now. As what Ms. Lynette mentioned before, PRS is a voluntary nature, so it is a retirement scheme. So it has a built-in feature in the form of lock-in period. So your savings in PRS will be there when we need it at retirement. Of course, just like the mandatory scheme, PRS also offers a few types of withdrawals that members can make prior to hitting the age of 55. So again, website, go to our website to learn more about what sort of withdrawals you can make. So while we plan ahead, while we save, some portion will be available if we need them. Again, this all relies on whether we understand how to manage our financial literacy. Again, is important so that we don't grow unnecessary debt while we save for our financial while we address the financial need for our retirement years. I guess I cannot stress enough that one while we don't know in detail how much we need, but we have tools, like for example, just now I mentioned earlier, the retirement calculator, to help us at least give some indication on whether we are on the right track or not. And the financial literacy, financial planning via FPAM, and also via the insurance for protection, that will help us take a stock of whether we are prepared to face our retirement years, where we need all the help that we can, especially both on the financial aspect as well as the non-financial aspect. I mean, that another topic by itself, so which we cannot cover at this stage. Yeah.
Right. Thank you, Sunny. So the topic, rather the theme for this ISF is Silap Labo Duit Lebo, right? So we have to talk a little bit about financial scams. According to the police commercial crime statistics, Malaysians lose an average of 2 billion every year. That's billion with a B. That's just crazy. Senior citizens will be affected more because their retirement savings are wiped out. Perhaps I can start with Lynette. In your experience, why do people fall for financial scam?
Well, if you were to look at senior vulnerability report by IOSCO, which was published in March 2018, with the move towards online communication and digital disclosure as an additional area of risk for senior investors, while technology is great, but it also, those who are not tech savvy, they get left behind, so they lose out on information. So, and in that sense, when they are not able to keep up to date, there is a high chance that someone may come and talk to them, and they may not be able to verify the facts. The other area which make the seniors more vulnerable is the current pandemic, which render significant reduction in interest rates. So for those who are dependent on that, they tend to panic and say, hey, how am I going to generate? So they start looking for a lot of areas where they can increase their interest rates or returns. And that's when they fall prey. There are a few things that was mentioned in the senior vulnerability, which is relevant, and it cuts through all geographical areas. One is financial scams, where economic and consumer scams like lotteries, sweepstakes, scams involving non-existent products and services, such as weight loss, love scams. We hear a lot of lonely women losing a lot of money to so-called husbands-to-be who promise to take care of them for the rest of their life. There's, of course, the investment fraud, where somebody knowingly mislead an investor using false information for the purpose of their own monetary gains. So, for example, very common in Malaysia is how to help you to claim your unclaimed money. Cryptocurrency by public figure scams. That one, I even hear reminders asking me about it as well. Oil and gas scams, high yielding programs, you have your serai, your agar oil, your cows, your palm oil, there's plenty of this. And one
perhaps I can also get Mark to chip in on whether if there are insurance agents, are there bad apples in the industry?
Yeah, Mark, you want to take that?
Well, look, there can be unscrupulous people in every industry, but I'm really confident and proud to say I don't think that they make up a significant number. But needless to say, I mean, I think there's one precaution that everyone should take, right, and that is to really do some research and homework on what somebody may be proposing to you. For instance, are they licensed and regulated by Malaysian authorities, right? Is the product offered, is it something that is licensed and regulated by Malaysian authorities? I mean, if someone just does a bit of research in that regard, they will save themselves a lot of heartache, right? Because nearly all of these things are all either, emanate from offshore, right? They may have slick paperwork and collaterals and, all of that. But if it smells funny, it usually is. And I think people, can fall prey for this because of the fear of missing out, right? They don't want to miss out, right? I mean, they get a chance to to make a bit of a profit. They don't want to. They don't want to. I remember one time, this a couple of years back, someone was trying to promote this scheme to me that that really did surely look like a scam, right? And so his answer to me was, well, you just get in for a while, make a bit of money, and then get out. You know, as if to recognize that it is a scam, but you can still make a little bit of money by getting in and getting out quick, right? So, I mean, they're really at the moment, and there hasn't really been much of a proliferation of insurance scams. I mean, in terms of, you know, taking your money, right? There's certainly insurance fraud, but, you know, I think generally the Malaysian public is very safe if they're dealing with a licensed representative of an insurer or a financial planning firm.
Great. Thank you, Husaini. In terms of PRS, are there any red flags the public should take note of before opening an account or making a contribution?
Well, against all these scams potentials in Malaysia, so the best way to save, or rather not to say the best way, I mean, one of the safest way to save in PRS is in PRS for your retirement money, because it is a regulated industry. I've said that a few times before. So you can either talk to a certified PRS consultants, or you can do online via our official website at www.ppa.my. And if you don't know who to talk to, or again, you can call us at 1300-131-772, yeah, which you can get the number at our website as well. We'll be happy to pass you to whichever providers that you wish. Yeah? Well, it is understandable that there's always market volatility, especially in the short-term horizon, as what we are seeing now. But that shouldn't derail our saving plan. We need to continue full on, yeah, to save more of our retirements. But then again, as it is voluntary, so if we feel that we need to tweak a little bit here and there, you are allowed to do so. Yeah, I mean, you can do so, but do it with both your eyes open, and you should know what kind of end game that you want to get. Yeah? And again, talking about quick skin cepat kaya and all that, there's no easy way to grow our savings. Time horizon is very important. There is this rule of 72. If you know some of the stuff, there's rule of 72 that can help us estimate, yeah, how long does it take to double our investment at a desired growth rate. Yeah, for example, if we desire or we wish a growth rate of 8%, so what we can do is divide 72 by 8, and the answer is 9. So it takes 9 years to double our initial investment. So if you put aside 100 now and you don't put anything else, you need to wait for 9 years at 8%, and market may not grow at 8% all the time. There's ups and downs and things like that. But the good thing about PRS is that you, with talking to PPA or to your financial planner and things like that, you can plan whether you can change or move or switch to various funds that are available within PRS. We are up to 56 funds or 55 funds, yeah, offered in both Sharia and conventional, offered by 8 providers. So take your pick. Talk to us, PPA, or talk to the right financial planner to help you out. Yeah, so that's all available. So let's not go. As I said, cannot stress enough. There's no easy way to grow our savings. We need to put the money. We need to wait for it to grow, and let the certified financial planners, or let the certified fund managers via the PRS providers do their work in order to grow our investments, grow our savings. Yeah? Thank you.
Right. Thanks. Well, it's 11:49 now. I'd like to get to the questions, and there's a bunch that have been coming in, but perhaps I can just get one concluding brief final message from Lynette, Mark, and Husaini, just to conclude our discussion on retirement challenges. Do you have any final message to leave us? Lynette, I'll start with you.
Okay. Well, plan now for yourself, financially, physically, mentally, and emotionally. Whilst you are younger, clear-minded, and have more time to your advantage, and learn from other people's mistakes. It's less painful. And if you want to speak to someone today, start the conversation, you can go to smartfinance.my, go to the live chat, because ongoing now there's a theme plan for you where you can have 45 minutes to speak to a licensed financial planner in terms of your retirement goals.
Thank you, Lynette. Mark?
Yeah, I think as I mentioned earlier, I mean, I think it's, you know, save first, start disciplined when you're young, you know, and plan for uncertainties, right? Protect your family along the way, protect your ability to accumulate enough money for retirement along the way. Yeah, I mean, it really is, it's not complicated, right? I mean, it just takes discipline and time, and think ahead about what post-retirement looks like.
Thank you, Mark. Hussaini, final message?
Yeah, I guess all my panelists have said the right thing, so I'll just say start now. That's it.
Yeah,
start now.
Okay, all right, let's move on to some of the questions that came in. I think the most voted one, or the one that attendees would like to address the most, concerns the tax relief. I suppose I should pose this to you, Mr. Hussaini. Do you think the quantum of tax incentive for PRS of 3,000 should be increased? And then the second part is, will the tax relief period be extended?
Okay, well, let me go to the second part for whether it's going to be extended or not. We have made the proposal to the government this year to include in the budget, which is going to be tabled soon if we get through the period of uncertainties now. We're hoping for it to at least be extended. Yeah? Ideally, we would like it to be have no expiry, just like insurance. Yeah, so that would be ideal. But we'll see what we can get. So if we can get extended for at least 10 years, that will be good. If we can get it in perpetuity, that will be even better. Whether 3,000 is enough or not, I think we need to look at the reality for Malaysia. Like insurance, there's 3,000, EPF, there's 4,000. So I think for now, that seems to be the right amount, yeah, until we can revise everything upward. I think that's for the policymaker to decide. But whether there is tax relief for us or not, we shouldn't be looking at it as a pure reason or the only reason to save more for your retirement. Because the thing is, we need to assess our needs first and then see whether the scheme like PRS offers anything extra to sweeten the deal, so to speak. Yeah? But whether is there 3,000 or more, we still need to save for our retirement. We need to still buy insurance to protect to look after, to take care of our medical needs, for example, when we retire. So that is equally important decisions to look at as well.
Yeah. Thank you. The second most popular question is a bit more personal. Someone from Sharo is asking, can you share what the three of you have done to prepare for retirement yourselves?
Do we have time?
Is there a summarized version? Maybe Lynette, I think you touched a little bit about that in the panel. Can you kick us off just briefly? Some tips?
Yes, I've done a full-fledged financial plan for myself. I am working with my financial planner to make sure the implementation is in place. So retirement is part of it. And I tweak my plan every year to ensure that I'm on track. So yeah, I think that's the shortest answer. Back to you, Ernest.
Thank you, Lynette. Mark?
Yeah, actually, I'll tell you a few specifics. One is for about 10 years prior to retirement, I was just putting in a lot of money into EPF, and I think that helped a lot. And also, as I mentioned, I planned ahead by buying personal medical insurance several years before I retired, right? And I bought it as a rider to an investment-linked policy with a very heavy top-up premium. The top-up premium goes into investment that will help me pay for the rising costs of the medical premium, over my retirement years.
Hussaini?
Okay, I guess that the two panelists have said quite a number of things. So I just want to touch base. I want to see that you have to have a good career as well. You have to build a career that would sustain your lifestyle, because if you have the kind of career that you like, one is like you are happy to go to work. You're happy to work. It's not like you drag your feet to go to work. So as you get your salary and everything, you plan how much you want to save. And then because if you have extra, then you can purchase the kind of medical coverage that you would like, the kind of savings that you would like, and so on. So yes, I have saved extra through PRS, because I'm being there. But even before that, I have saved through some unit trusts. I have bought a number of insurance, typically the medical insurance. In fact, prior to the session, I mentioned to my fellow panelists that I have changed medical insurance a few times over the years, because they keep giving better products. Now, like I have 1.5 million per year, which is it's a lot. But then again, that's what you can do when you can shop around and things like that. So I mean, just to say shortly, yes, I've covered ground in terms of protection. I've covered ground in terms of savings. I have not planned to see the world so much, but that may come later.
Yeah. We have time for one more question, I think. And this one, it's being asked in various forms. Most of it is about, as a young adult or as a fresh grad, how much do I have to have before it's meaningful to see a financial planner? And related to that also is how much should I set aside? I think people want a number, right? To put aside how much they want to know that they're on track for their retirement plan. Maybe Lynette, you can address this.
All right. Depending on the range of service that you want and how much you want from your financial planner. If you're just going to do your retirement only, you probably pay about 2,005, and you don't have to pay all at once. It depends on the respective financial planner. This is just a ballpark figure. When you speak to a financial planner, he will have to assess how much work he has to do for you, and then you will have the actual price. So speak to a licensed financial planner. But if you're going to do a holistic plan, and depending on at which stage you are, if you're entry level, probably 3,000 to 3,005 will be enough. But if you are having a family or a sandwich generation, you may look at between 5,000 to 8,000. Now, I want to address one question that always pops up when I tell people that this is the range you have to pay. They say, wow, so expensive. So I ask them, do you know someone who made a financial mistakes? How much was their loss? And averagely, it ranges from between 15,000, 5,000 and above. So if this is the kind of money that you put in to invest in yourself so that you can have a better life now and in your retirement, is it worth it? That's why I like to leave that questions with the audience.
All right. Mark, very briefly,
well, I think,
two more minutes.
Yeah, just look at it from a different angle. I mean, there are many insurance advisors who, there's no specific amount of money that one needs to have to talk to an advisor, right? If an individual can afford to set aside 100 or 200 ringgit a month to start, I mean, that is the bare minimum, right? And so there really is no minimum. And it's just a matter of getting started, right? Even in a unit trust, right? You can set aside as little as 100 ringgit a month, right? And so there are many places to go, online or with professional advice. Either way will work.
Thank you, Mark. Hussaini, final word to you on the youth.
Well, pertaining to that question, I think I have not much to add. So why don't we go to the next question?
Okay. So we are at 11:59 now. One more. Okay. The admin would just like me to remind everyone that there is a pop quiz going on after this. So if you've paid attention to what we've discussed or what the panelists have been discussing, then do join the pop quiz to see what are the prizes you can win. Okay, let me just take one last one. There is a question on fees. That 1% of fees can make a huge difference in the long run. are there any plans to make this fee lower?
Talking about PRS, yeah? Okay, the fees are, it depends on the kind of providers that one talk to. In fact, if you look at the PPA website on fees and charges, the sales charge, I'm assuming this is a sales charge, it is between 0 to 3%. So for example, if you come online, if you are 30 and below, if you sign up to PPA online, PRS online, the initial sales charge will be 0%. And if you go through your company, for example, there's a corporate scheme, you may get 0% as well. Yes, we understand that this fee, which is similar to unit trust as well. In fact, our PRS fee, I mean, the structure is similar to unit trust, but PRS fees are typically lower. This may hamper some of your decisions to invest extra or save extra. But the thing is, this PRS being a voluntary scheme, we put all our facts transparently on our website. So our fees are structured in that way. That doesn't mean that there are other schemes do not have that kind of fees or do not have that kind of charges. It's just that they have different ways of funding their operations, by charging it to the fund and so on and so forth. So while I can say that in the long run, we may review the fees, but at the same time, now you may shop around and see which offers the best deal for your needs.
Okay, right. The website is ppa.my, right? You can
yes,
browse it to get the fees comparison table. So everything is up there. Likewise, check out their website for more information. Thank you very much, everyone, Mr. Usaini, Mr. Mark Odell, and Ms. Lynette Lee. It's been a pleasure speaking to everyone. All right.
Thank you.
Thank you.
Thank you.
Thank you, everyone.
Let's move on to the quiz, everyone. See you.